Let's understand break-even sales. It is the level of sales at which business makes no profit, no loss. It means the sales is going to be equal to total cost. Look at this, you will get better clarity. Here sales is 100, variable cost is 60% of sales. So 100 minus 60 gives you a profit. We call this profit as contribution. We call this as contribution because it is going to contribute to recover the fixed cost. Look at here, fixed cost is 30. So 40 minus 30, you get the net profit as 10. Now this information is going to help us understand break-even sales better. How? There is a critical relationship between these two items, that is contribution and sale. That is, contribution is 40, sales is 100. So this 40 expressed as a percentage of 100 will give you 40 by 100, 40%, and we call it as PV ratio. This information is going to help us to find out break-even sales. Already I told you at break-even sales profit will be 0, but here profit is 10. So this is not the break-even sale. So how do we find break-even sale? See, at break-even sale profit is going to be 0, right? So let's calculate. Here I'm starting with an assumption profit is 0. When your profit will be 0? When the contribution is equal to fixed cost. We know fixed cost is 30 already, so that is going to remain same even in case of break-even sales as well. So fixed cost is 30. It means this fixed cost is subtracted from the contribution, and that's why we have the position as 0. So this is 30, then contribution should also be 30, only then 0 profit or loss is possible. So at break-even sale, what is happening is fixed cost will be equal to contribution, and this understanding is very important to find out break-even sale. And it's for this purpose we have already derived the profit volume ratio. So let's put our understanding here. At break-even sale, contribution is going to be equal to fixed cost. That's what we have seen here, right? Contribution is equal to fixed cost. Fixed cost is equal to contribution. And let's bring our PV ratio understanding. In this case, we have understand the PV ratio to be 40%, right? So let whatever be the sale, PV ratio is going to be 40%. Why? It's because of the relationship between the sales and variable cost. Variable cost will move along with sales. That is, if the sales is going to be 100, variable cost is 60%. If the sales is going to be 200, variable cost will be 60% at 120. Okay, so contribution of 40% will continue for break-even sales also. And already we have found out what is going to be the contribution at break-even sale. We found that to be 30. So if this 30 is equal to 40%, that is PV ratio, then automatically its 100% will be the sale. How I'm saying this? Look at here. This 40% PV ratio gives you the contribution. So if contribution is 40%, then what is 100%? That is the sale. Similarly here, this 30 basically represents 40% contribution. So if this is 40%, then what will be 100%? If we can find that, then automatically we are going to find out break-even sale. So let's do a small cross multiplication. So look at here, we'll multiply this 100 with 30 and divide it by 40. So we will get a number, and that is 75. And how I got this? It is 30 into 100 divided by 40%. So when we write it, it will become 30 by 40. And what you're going to get is 75, and that is the break-even sales. It means it is this 75 which is going to come and sit here. So I got it 75, and already we know contribution 30. So 75 minus 30 is going to give you the variable cost of 45, or simply you can take 75, multiply it with 60%, you will get 45. So now we have derived the break-even sales. And how we started? We started with this understanding. At break-even sales, profit or loss is 0. And how it is made possible? it is made possible by deducting the fixed cost of 30 from contribution, which is also supposed to be 30, and this 30 is basically 40% of sales. So what we did, we equated this 30 with 40%, which helped us to find out 75, which is a break-even sale. So what is this 30? This 30 is contribution, but it is also equal to fixed cost of 30, right? And in break-even sales computation, generally we will be having information about fixed cost. So fixed cost, since it is equal to contribution, we can take fixed cost, we can divide it by PV ratio, and that will help us to find out break-even sale. In this case also, what we have done, we have taken 30, we divided it by 40%, which helped us to find out 75, which is the break-even sales. So let us reduce this as a formula. Break-even sales is equal to fixed cost divided by PV ratio. So look at here, fixed cost divided by PV ratio. PV ratio is nothing but contribution divided by sales. So this gives even a modified formula. That is, you can take the sales in the denominator of the denominator to the numerator here. So you can have the modified formula like this: fixed cost into sales by contribution is equal to break-even sales. So most commonly we will be using this formula, and in certain cases, based on the availability of information, we can also use this formula to find out break-even sales. If you find this lecture useful, please like, follow, comment and share.